majority of Americans are very uncertain about their finances, especially when there's things that they can't control that are happening throughout the world, throughout our country, throughout their local environment. What are their finances doing? How are their investments doing? My name is Matt with Highline Financial Coaching, and today we're going to talk about that. We're going to talk about the uncertainty of our finances when there's some circumstances that keep us from controlling those finances. So, how many of you have looked at the news or went through an election or went through something devastating and worried about your finances? I think all of us have. Part of the reason that I created Highline Financial Coaching is because of the uncertainty that my family and I had with our finances, with the jobs that we had. I mean, even recently, over the last 2 years, as we created this company, there was a lot of uncertainty with our finances. When I was with my last company that I had to leave, there was always uncertainty about what was going on. We had COVID. COVID affected people's finances in a way that we couldn't control. We saw one of the biggest impacts I've ever seen in my life with interest rates, with people's jobs. There was one of the companies I was at that time automatically implemented a 30% decrease in our pay just because they were afraid of what would happen. They hadn't actually been hit with anything negative from COVID, but they cut people's pay just because of fear. And we see that a lot. Right now, there's a lot of things happening with taxes and tariffs and changes in administrations. We have a lot of things in our cities. Right now, eggs are crazy expensive. We're seeing those things that we can't control. So today we're going to talk about how do we control our personal finances in a way that external factors are not going to affect us as much. So there are a lot of things that you can do right now to avoid that. One of the big things is always have a rainy day fund. If there's anything that I can advise people to do, have a rainy day fund. Now, there are multiple ways to have that rainy day fund. You can save up money. What I would do is see what do you need to survive at least for the next month, and put that aside. Put that aside. If something were to happen, how much money is it going to take to pay all of your essential bills? Now realize essential means the ones that you really need to survive. You can cut your TV, you can cut some of the streaming services that you have, you can cut your eating out, you can cut a lot of things out of your budget if you need to. So figure out what the essentials are, have a rainy day fund, and that's the first thing you want to do. Second, you want to start paying off your debt. Pay off some of those things. Credit cards are a great way to have a rainy day fund, because if you have a credit card that you're not using and you have a $5,000 limit, you can utilize that in case of an emergency. Now, if you do utilize it, try to pay it off before it starts accruing interest. If it does accrue interest, that's okay if you can afford the payment, because again, this would be in case of an emergency. Also, you may want to have some cash on hand in a safe location, just in case you need that. I remember years ago with some of the hurricanes that were happening, when people were trying to leave, they had to have cash because the electricity wasn't working, so gas stations they had to take cash, and they couldn't break larger bills. So you want to break it down into smaller bills so that you can get that paid for. So that's the first thing. Make sure you have a rainy day fund. Also, create a budget. Now, a budget does not need to be difficult. The most basic budget you can have is how much money do you have coming in and how much money do you have going out, and try to stick with that amount or less every single month. If you're spending less than you make, then you're in a decent position. Now, if you can continue to increase that so that you're bringing in a lot more than you spend, then you can really start saving, investing, and preparing for your future. So those are some of the first couple things you can do. And there's some things you can do at the bank as well. By getting lines of credit, you can have, if you own a house, have a home equity line of credit so that you have access to some of that equity that you have in your house for any emergencies. If you lose your job, that is a great way to live on that equity without losing your house, because the bank is going to take your house if you have a loan on it, no matter how little you owe on it. So be able to pull some of that equity to survive during that time. Now, it's not fun pulling from that equity because you've worked hard to get there. So that's another thing you can do. But it's yours. That equity is yours. It's not the bank's. You've paid for it. You deserve it. You earned it. The bank just loaned you the money to be able to get into the house, and they are taking plenty of money from you with the interest you're paying. They're charging a 5% interest rate equals about 100% interest over the lifetime of the loan. So just know that they are getting plenty of money on that. So make sure that you've got access to that money in case of an emergency. Also, you want to take advantage of any opportunity at work that you can to invest. If your company matches your 401k, go ahead and match that. Now, again, there are a lot of ups and downs in the market. We just had a rough day with the market because of some of the tariffs that are going into place. But money in the market is long-term use. You want to keep it there. Don't overreact and pull everything out right now. You want to keep it in there, because over a 20-year period, if you miss the top 10 biggest growth days in the market, you'll miss out on about 80% of the growth that you have over that 20-year period. So keep your money there, because every single time there's a drop, there is always an increase. Every single time we've had a drop, there's an increase. So and one of the things you can do is turn off the news. Turn off the news, turn off your social media when you're uncertain about your finances, because that's not going to help you. It's not going to help your personal goals to look at that. There's a lot of doom and gloom. The news never covers the good stories of what's going on and how things are getting better. They always cover the negative. Turn that off and look at your personal finances, set those goals, and stick to those goals. The best thing you can do for your own finances is take control of them yourself. You can create the money that you need. You can create the stability that you need without trusting, without listening to the news, the government. The government's not going to make you wealthy ever. You are going to be able to make yourself wealthy by taking control of that and moving forward. And that is one of the best things that you can do, is focus on yourself and your family for the goals that you have. Now, that doesn't mean that you're going to be greedy and hoard it all, but make sure that those goals are in a place that you can see them, you can have them available. And I can tell you, I've seen thousands of people take a very negative financial situation and become the person that they want to be financially. They take control of their finances. They pay off their debt. They have rainy day funds. They start investing in multiple different avenues, and they change their life for the better. But I've never seen anybody try to rely on other sources and become wealthy. I've never, ever seen anybody try to rely on some of the changes in the government, unless they're a government official, and then they've found ways to become wealthy. But you and I are not in that position, and we wouldn't want to be. So we want to create that wealth for ourselves. So my name is Matt with Highline Financial Coaching. I hope you guys all have a great day.